Okay, good afternoon, everyone, and thank you for joining us. We, as always, appreciate everybody's time, especially how valuable it is in the middle of a Thursday afternoon. So we truly appreciate that. Our goal is for everyone to walk away with a few nuggets of great information to help you change your business for the better. Okay, that's the goal. I feel like if you can spend 45, 50 minutes with us today and walk away with a couple new ideas, make some more sales, have a new solution or a new sales concept to go, if we can mute those lines, guys, that would be great. Thank you. So if you can pick up a new sales idea, a concept to go back to your book of business, or even go out and prospect to new clients, right? To potentially new clients by using our prospecting tool, then to me, it's a win-win. So we're going to dive into a little bit of everything today. We are going to focus on a few things. Number one is 2019's top-selling life and long-term care hybrid product. We have the VP that's jumping on the call with us today, and we're going to show you a 100-foot overview on the great technology built around it. We'll give you some sales ideas around the concept. I can tell you one thing. We have literally health, life, and annuity agents that have been running with this product. I mean, and I'm talking big target premium cases. These aren't $50 a month. So the money's there, renewals are there. It's a win-win. And we have the LTC King that is joining us. So great stuff to come. Andrew Paris is also on the phone with us today. Yes, we are diving into this Life LTC hybrid product. That's the main focus. And then number two, first time ever, we're going to give you a glimpse of the brand new Sell While You Sleep platform. Okay, now think Amazon, right? But for insurance products. So you can literally, and this is free, by the way, so there's no gray area or catch, but you can literally sign up through Levinson. It's only available through us. We have 3 carriers to start with. We have over 10 products that your clients can pick from. They can line up the products side by side, okay, including term insurance, disability, critical illness, cancer. We have a guaranteed issue. Everything is same-day approval. Some cases, you just print the policy. You can line up all the products side by side. Your client literally clicks with their mouse, signs up online, approval. Most of them are instant. Worst case, same day, done. It's that simple. This is the new Amazon for insurance. It's going to reside on your website, or if you want to blast it out or use it on social media. First time this has ever been done. It's been a dream of mine. We're finally launching at the Expo, and I wanted everybody to get a little sneak peek on today's webinar, what this looks and feels like. So very excited about that. As you know, I sat down with Gary Vaynerchuk. He's the social media guru. He is huge now. If you haven't heard of him, check out Gary V. He's got over 4,000 employees, international. The guy's an animal when it comes to marketing online. So I sat down with him for an hour on the Bill Levinson Experience podcast, and he gave us the approval and the okay to use his exclusive white paper, and it talks all about using Facebook to market. So we're giving this free white paper to everyone that's on the call today, okay? So as long as you're an agent with us, you have to be licensed with at least one company. We're sending you this white paper after today's call, and hopefully it'll help everybody. That whole social media world, especially with Facebook, is untouched when it comes to insurance sales. I'm telling you right now, that is a great opportunity for you to prospect. Number 3, we're also giving away the free Amazon tablet. The Kindle Fire 16 gig tablet will go to the number 100th registrant. I'll announce the winner at the end of today's call. Also, if you look in the middle there in red, it says special giveaways. So very simple. Leave a comment on our Facebook page or on our podcast channel. Okay, and the podcast channel is available on your podcast icon on any iPhone or you can pull it up from YouTube or Spotify. If you leave a comment and just rate us, just take a screenshot or just go on our Facebook page, leave a nice comment. We will send you the free RMD sales book. It's called The Wealth Assault on Boomers. Great for marketing. It's a great giveaway for prospects that helps you talk about retirement. So great stuff there. Free book. These are usually $20. We sell them for a co-op price of $5, but again, free if you leave a nice comment. Also, on the right side, you're going to see 4 attachments. They look like little red Adobe PDF icons. Okay, if you look at that section there, it's in your panel or your bar for the actual webinar. The top one is agent contracting. If you're not yet appointed with us, then we have a great LTC protection at your fingertips PDF. We have our leads for contracting coupon. So basically, if you're appointed now with a carrier and you move over to Levinson, we match or beat your existing commissions, plus we give you free exclusive leads just for making the switch, no cost to you. And then the bottom attachment is a pre-underwriting inquiry. So if you have a case right now you're working on and you wanted to know if they fit for this product or any other products that we have, just print that out and send it in and you are good to go. Okay, let's move forward here. So obviously we're focusing today on this hot new life LTC hybrid concept. And what I wanted to take a minute to show everybody, well, we have a huge number of attendees on today, by the way, so thank you for that. Just a quick little snapshot on the left side. Okay, these are the 3 top standalone long-term care products that are available today. Of course, we have them all with Levinson, Transamerica, Mutual of Omaha, and NGL. By the way, the NGL product is also on our Sell While You Sleep platform. So now on the right side, this is the new hot button in the LTC space, okay? We all know what happened to standalone LTC. Premiums went sky high. A lot of carriers and products have left that part of the industry. So the new hot button are these hybrid products. They are awesome, especially with what Keith has to talk about with One America today. But what I do want to show you is we have other life insurance plans with long-term care riders. So these are more like if you're looking at a term product or a universal life product and you want to add a LTC rider, these are all of the carriers that we have here at Levinson to choose from. So we can also run one of these quotes. Obviously, our first go-to is One America and their hybrid product. But of course, for backup or if you need a traditional standalone solution, we have that as well. So I wanted to give everyone just a 100-foot overview on LTC in a nutshell here at Levinson and Associates. Okay, moving forward, if you want to take a look from our website, if you want to find marketing material for, let's say, downline agents or consumers, or you want to send out LTC videos or use our e-blast service and put together your own marketing piece, which, by the way, we already have done for you in our marketing library. All you have to do is co-brand with your name logo. Very, very simple, or we can even do it for you. Simply go to the long-term care section on our website. You can see it in front of you in that blue highlighted bar. It says long-term care. Click on there, and then everything that we have available for you to start marketing is at your fingertips. And of course, no charge for any of this stuff. It's all built in to the iGenius platform. Okay, moving forward here, without further ado, I want to jump into today's feature presentation. Mr. LTC himself, we have Keith Birkin, our VP from One America. Keith, you there?
I sure am.
Okay, thank you.
Okay. Great, thank you. You guys see? Oh, go ahead, Bill. I'm sorry.
Yep, no. We can see your screen. We're ready to go.
Okay, great. Fantastic. Want to thank you so much for having me on. I always appreciate your time as well as time in front of your agents, which I consider very valuable. And not to be obsequious here, but I'll tell you, I've been in the industry going on 20 years, and I can tell you wholeheartedly there are few agencies that are running with the curve or always ahead of the curve as much as you guys, Levinson and Associates, proven out by your commitment to social media, always staying ahead of what's going on, trying to provide resources and value, not just product information to your agents and advisors. So definitely those people on the call that are working with you, you should feel pretty lucky to be able to be working with such a good agency. And that's evidenced by even putting on what we're talking about today. They've got a really good breadth of different carriers that they work with for these types of products. Today, you're just going to hear about ours. Although I can tell you, I am definitively not going to just dump product on you. My goal is to help you understand how linked benefits, how the solution will fit into your distribution. And more importantly, what's moving the needle on turning illustrations into applications. What is it that's making people say, yes, I need to do this? And I can tell you, it's not just having the conversation about asset protection, but I'm going to show you absolutely what is working and getting these people to take action. So you're not just going around wasting your time showing these illustrations. And this, by the way, is very much right now, based on 2017 LIMRA numbers, 25% of all life insurance sales were hybrid products. That's a big number. That includes all the term life as well. So this is no longer the future. This is right now. So I want to get into how and why before I get into the products. We're definitely going to make good use of your time. But first, I want to talk about why this is something you definitely still need to be talking about. Yes, the industry has definitely shrunk. There were 150 companies selling this 16 years ago. Today, there's less than 10. Why? Because it's expensive. Now, unlike auto insurance, which has a 1 in 750 chance of usage, or homeowners, where it's 1 in 1250, this is 2 out of 3. And it is expensive based on Genworth, which still has the best cost of care survey out there. And this is based on 2014's numbers. For 1 year in a nursing home, a private room is just shy of 90 grand. But let's just assume, with an inflation index of 3.5%, what these costs are going to look like 10 years down the road. You're looking at just shy of $125,000. 20 years down the road, you're looking at just shy of $175,000. So for your clients that are looking at this and saying, yeah, I'm thinking about self-insuring, they might not be considering what this is going to look like 20 years down the road. And quite honestly, this is only a part of the conversation, because I want to pause for a second. I want to show you 4 trends that are massively impacting the cost of care and supply and demand. The first of which is the baby boomers, which is actually right now the second largest segment of the population, totaling almost 80 million people. And you had the first wave of baby boomers hitting their 70s just 2 years ago. So, and by the way, 10,000 people a day are turning age 70, which, when you think about it, creates an incredible opportunity for you. But what's that spelling from an industry standpoint? You've got the second largest segment of our population getting into their prime years, their prime ages, that they're going to need long-term care services. And that's a major overwhelm to the supply and demand cycle, which there's already an enormous disparity to as well. But when you have nearly 80 million people in the next 10 years getting into those years where they're going to need long-term care services, you're going to see an even larger disparity between supply and demand. And then we have medical technology. And this, by the way, is a good thing, because what was killing us 30 years ago are today considered chronic conditions. We're not dying like we used to. High blood pressure, high cholesterol, diabetes, variety of cardiovascular disorders, death sentences 30 years ago. But we're living now to our 80s and 90s, which is great, but it dramatically increases the chances we're going to need care. And then you have family dynamics. Pay close attention to this, because this is what really sells this. Probably won't surprise you to know 75% of all long-term care starts off at home. But what probably will surprise you is that 70% of all home care is provided by family members. And that's why people are buying this. They don't want to be a burden on their family. But even family dynamics are somewhat shifting, because you got mom and dad retiring to the warmer climates of Southern Cal, Florida, Arizona, and the kids are staying put. And that's now straining that as well. And lastly, we have government, and I absolutely promise you I'm not making any commentary on this administration, but what you need to know is over 40% of all long-term care is paid by the government. And the entitlement programs that are fortifying this are largely unsubstantiated, which is why the government is consistently making it harder to qualify for Medicaid, and why they're consistently introducing new legislation to further privatize long-term care and putting the onus back onto the industry. And what I'll tell you is, regardless of whether it's this administration or the following administration, this has to change because the entitlement programs are largely unsubstantiated. Sorry about that. Just quelling some of that background noise. So this is really good information. And by the way, what I was just showing you is just 1 year of care. The average length of care for a man, a little over 2 years, totaling 20 years down the road, almost 385 grand. For a female, just shy of 4 years, 20 years down the road, you're looking at almost $645,000. And people with Alzheimer's, pay close attention to this, are going to live 8 to 20 years with the syndrome. 20 years down the road, you can be looking at long-term care expenses totaling almost $1.4 million. I call that the Titanic. Titanic was built, it was the strongest, biggest, most unsinkable ship ever built at its time, and it went down to the bottom of the Atlantic less than 2 hours. You got clients sitting on 1.4 million heading into retirement. They're feeling pretty unthinkable. One of them gets something like Alzheimer's, and watch how fast their portfolio goes down, much like the Titanic. But quite honestly, to me, the most disturbing number is this, 70%. That's the chance when you're over 65 that you're going to need some type of long-term care. 7 out of 10 of us will need some type of long-term care. The problem, most people think they're in the 30%. Oh, by the way, nursing homes are filled with people that thought they'd be in the 30%. So again, this is all really good data, really good stats, really good percentages, and really good information. This is for you. This is for your edification as to why you should be talking about it. If you are a registered rep, you have a fiduciary responsibility to be talking about it. If you work for a wirehouse and are a financial advisor, you have a suitability responsibility to be talking about it. But as insurance agents, it just creates an incredible opportunity and puts it onto your plate why this is absolutely still so valuable. So how do you have the conversation? What is it that's moving the needle, making people want to go forth and actually buy these products? How do you have that conversation? Simply 2 questions. The first being, look, Mr. and Mrs. Jones, I don't know if you'll ever need long-term care, but God forbid, if you did, have you considered the impact it's going to have on your family, your spouse, your children who have jobs and children and homework and soccer practice? Because these are the people who, by the way, you always swore your whole life that you'd protect. These are the people that are most impacted when you need care. And we need to put a plan in place to protect your family against that happening. And then you go into the second question is, if you needed long-term care, have you considered how you're going to pay for it? And are you aware that nothing pays for this except your own income and your own assets, which you've allocated for retirement? And this leads you into the perfect transition into the linked benefit approach. Why? Why do we love this? Why is Levinson and Associates so high on these types of solutions? Because that's one of the only protection products where it's heads you win, tails you tie. Your worst case scenario with these types of solutions is you take your money back. You put your money in, it's going to come out tax-free if you never need it for anything with a tax-free death benefit. If you need it for long-term care, you're going to get a fantastic long-term care benefit. And if you don't need it for anything and you decide down the road you want your money back, you're going to take your money back. I really position this to clients, you're almost not buying anything. You're just shifting money from your left pocket, repositioning it over to your right pocket, and basically you're looking in their portfolio, finding a lazy asset, an asset that they don't need for income now, to reposition it So they needed to create that maximum amount of income, that $175,000 down the road when they need it the most. And for that transition, for that asset transfer, they're going to get cash value, a death benefit, long-term care benefits, and only with One America will they get a lifetime benefit of long-term care they'll never outlive. And for your clients that said, you know what, I really want to self-insure, fantastic. This is self-insuring. It's just a better way to self-insure. This is literally insurance for people that don't want to buy insurance. Why? You always hold on to the liquidity of your dollar coming in because you can get it back. Isn't that pretty much self-insuring? And we'll go into the solutions and you'll understand exactly what I mean. But some of my favorite taglines is, it's heads you win, tails you tie. Your worst case scenario is you get your money back. And it's insurance for people that don't want to buy insurance. It's just a better way to self-insure. So let's go into our solutions. And yes, we've got a lot to show you here, but what's great is really once you understand even how one of our products work, you're really going to, by concept and design, understand how they all work. It really just then boils down to, where's your client's money? What are they comfortable with? This is not your grandfather's old traditional LTC policy. This is now 100% custom fit solutions. So you got to do a little bit of a fact find with your clients, because this presents an incredible opportunity, because there's so many different ways you can put them into solutions, put your clients into these solutions and do that 100% custom fit around their portfolio, their age, their health situation, wherever their money is. So here's our product suite. We have our asset care products, which is whole life combined with long-term care, and then the annuity care products, which is annuity combined with long-term care. And they all look and feel very similar. It really always boils down to, where's your client's money? How do they want to fund it? Do they have a lot of money and prefer doing a single premium approach? That'd be asset care 1. Or they're more income heavy, still working. They want to do more of a pay-as-you-go, an annual premium. That'd be asset care 4. Or maybe clients who are earning a lot of income, executives. That again would be asset care 4 and a 10 pay. And we're going to go into how all this works, but they're all very similar. It's just, how do you want to fund it, which makes the difference. So let's start jumping right into the asset care products. We do have 4 asset care products, but we're going to make this even easier and eliminate 2 of them. We're not going to talk about 2 and 3. First of all, they kind of do the same thing, and we have a better way of working with that anyway. So we're just going to start with 1 and 4. And all of the asset care products are on a whole life insurance chassis. So of course, there's an interest rate, right? The interest rate is 4%. And that's currently right now at its guaranteed lowest point. So what's great is you're able to tell your clients it's 4%. And if there are any changes, well, the interest rate can only go up, which of course benefits them. Now they can apply as an individual, or they can apply as a couple. We cap out at the age of 80, and it is actual age, but we use joint equal age. So you could have a couple applying together where the husband's 83 and the wife is 70, and he'll still be able to apply because we use a proprietary formula. It's not a true median age to come up between the 2 ages and come up with 1 age for the contract. So even though you're older than 80, apply with someone younger, boom, you can still get approved. Now I said apply with someone younger, not just a spouse, because 2 people can apply together that have any insurable interest. How do we define that? I use the 4 B's. The first B is betrothed, which means your spouse, of course. Second B is brother, and that just means you can apply with anybody that you are a blood relative with. The third B stands for business. Of course, you have an insurable interest with your business partner. And the fourth B stands for boulevard, which means anyone that you're living with in a relationship, you can apply with. And that applies for hetero or homosexual relationships. We're a pretty liberal company. Why is this so valuable and so important? Because we urge everyone and anyone, if you are going to apply with our company, to never apply alone. Always apply with someone. Why? Because our product is on a joint life second to die chassis, which means by definition, it takes 1 premium to cover 2 lives. That is absolutely, positively, monstrously huge. Why? Because let's say you're working with a couple that says, hey, we got $100,000 that we have earmarked to go into a protection product like this. With us, that $100,000 comes in for the husband and the wife. And you know the way these products work. The premium dictates the size of the death benefit. The size of the death benefit dictates the size of the long-term care benefit. And make no mistake about it, that's why people are buying this, for a long-term care benefit. The death benefit's great. That's just there as the guarantee. But my point being, with us, 100 grand comes in, it goes on one contract. That would create a death benefit of, say, 200,000. Any other carrier in the industry, husband and wife applying together, they'd have to take that 100 grand and split it apart into separate contracts. 50 on the husband, 50 on the wife. They're not going to get a death benefit of 200 grand on that. That'd be closer to 100,000. And their monthly benefit would be based on 100,000. So long story short, literally every other carrier in the industry, for dollar premium coming in, you are always going to get a bigger LTC monthly benefit with us because we're on a joint life second to die chassis, and we have a patent on that, and that is absolutely huge. So let's go into the products, really give you an idea how this works. And again, I'm going to show you a few different products today. What I want to do right now is give you permission to not have to remember how this works. This is one of the great benefits of working with an agency like Levinson Associates. All I want you to come away with today is knowing your opportunity. So just remember, and we'll go into that again, exactly what I mean by that, and you'll see once we've concluded the presentation how to really put that into action. So here's Asset Care One, which is our single premium product. And in this example, we're going to take a couple that has a joint age of 64. So we're going to grab that single premium, and in this example, we're going to use $125,000. Well, that's going to create a death benefit of $217,000. I mean, this is pretty simple to understand. They put in $1.25. They die. They never need it. It's a couple, so it's the second to die, and they're going to get $217,000. But if they need it for long-term care, of course, that's why people buy this. Their first pool of money that they'll have access to will be this $217,000. And when they design the policy, they'll choose how they can access that $217,000 for long-term care payout. They have two options, 33 months or 50 months. And in this example, we chose 33 months. So it's really quite simple. $1.25 comes in, that's their premium. They can take that back at any time. Remember, it's heads you win, tails you tie. They died, they never needed for anything. Well, their $1.25 yielded a tax-free death benefit of $217. If they need it for long-term care, well, they're going to get $217 divided by 33 months. That's going to give them $6,500 every month to pay for long-term care expenses per person. So should they go on claim at the same time, they'll actually get $13,000 a month until the $217,000 is exhausted. So don't pay attention to 33 months. And what I mean by that is they're not getting 33 months of long-term care. They're getting $217,000 total long-term care benefits they can use. They just can't pull out more than $6,500 a month per person. Because should they claim at the same time and pull out $13,000 a month, it won't last 33 months. We just use that number to come up with this number. Now, this is the base of the policy. I mean, it's not bad. They're putting in $1.25, getting $217, no matter what their estate wins here. But this isn't enough. This is what I call insuring for the garage on fire. They want more long-term care benefit. If they thought their maximum exposure for long-term care would be $217 grand, they would probably self-insure. They want more LTC benefit, and they can get that. So they can get what we call our continuation of benefit rider, which gives them more long-term care benefit. And they have two options here. The first option is to get another amount equal to the death benefit. We call that limited duration. So in this example, that'd be another $217 for long-term care, giving them a total of $434 grand. The second option, and vastly more popular, is a lifetime benefit of long-term care they'll never outlive, meaning they'll each get $6,500 a month until they exhaust the $217. And once that's exhausted, if they chose lifetime, this $6,500 a month, they'll get it forever per person, as long as they still need long-term care. Only carrier in the industry to still offer a lifetime benefit. So this is your base, and this is your rider. So how do you get this rider? You're buying the base with a single premium. Well, this is where you really start to see the customization and flexibility within our products. There's 4 different ways that you could pay for this rider. You could do it on an annual premium. It could be on a 10-pay, a 20-pay, or even a single premium for the rider as well. So you could say, you know what, I got $150. Let me just throw $150 at the whole thing. 125 goes in the base, 25 goes in the rider, and you pay the whole thing off. Personally, and probably the best way to really design this is what I call the blended approach. You put a single premium into the base and do an annual premium on the rider. Why? Because it's so inexpensive. What would a traditional long-term care insurance policy be? Annual premiums, that is. If you could get a lifetime benefit, which you can't, they all cap out at 5 years. But for a 64-year-old couple getting $6,500 a month per person, even on a 5-year plan, you'd probably be looking at premiums upwards of $12,000, $13,000 a year. A lifetime benefit, if you can get it, would probably be closer to $17,000, $18,000 a year. Annual premiums on our rider, if you wanted the additional $217, less than $1,500 a year. On the lifetime benefit, it's not $12,000, $10,000, $5,000. It's $2,600 a year total for the couple combined. And what's the biggest issue in traditional long-term care in the industry? It's been rate increases. Look at what this says here. Our premiums are guaranteed because they're on a non-cancelable contract. So I'm not sitting here telling you we've never raised our premiums. I'm telling you we can't raise our premiums based on the nature of our contract. So our three huge standouts, which are by far create an enormous amount of value you just won't see anywhere else, are a lifetime benefit your clients will never exhaust, B, guaranteed premiums that can never be increased, and C, one premium coming in to cover 2 lives. If you were to do this with any other hybrid, linked benefit, 101G carrier, any other combination product, they'd have to split this up into 2 different contracts, $65,000 each, which would give a death benefit probably half the amount and an LTC benefit thousands less. So we offer more for longer periods, guaranteed with more funding options. So this is Asset Care One. And to me, the beauty of the products, even though we have so many, is they all look very similar. The only difference with all the Asset Care products is how do you want to fund the base? Why? Because the continuation of benefit rider always stays the same. You'll get a limited duration or a lifetime option, and it's always 4 ways in which you could pay for it: 10-pay, 20-pay, single pay, or annual pay. The difference between Asset Care 1, 2, 3, and 4, because the rider stays the same, is just how do you want to fund the base. Asset Care 1 uses a single premium. Asset Care 4, you could choose annual premiums, or 10-pay through 20-pay, and Asset Care 3 uses qualified money, which I'm not going to talk about because we actually now have a much better solution for qualified money. You could get inflation protection on the base and or the rider. Some states don't allow inflation protection on the base. Florida is one of them. I would work with your marketer at Levinson to talk about the different options that are available based on the state. Commission is at the highest in the industry that I've seen, 8% commission on this, and our average ticket's $100,000. So it's very healthy commissions, one of the things that Bill alluded to earlier, and this goes up to the age of 80. Now, I spent a lot of time on this because, quite honestly, this is how all of the products look. The only difference is how are we funding the base. Even the annuity products look like this. It's just on an annuity chassis instead of an asset-based whole life chassis. So this is Asset Care 1. Let's move on to Asset Care 4. Like I said, looks just like Asset Care 1, right? Here's the base, here's the rider. The rider options are always the same. The only difference is Asset Care 4, instead of using a single premium to fund the base, you've got a lot of options here. You can do annual premiums. You can do 10-pay, all the way up through 20-pay. It could be 10-pay, 11-pay, 12-pay, and so on. And the best way to really explain this is through an example. And here we have a 55-year-old couple that says, look, I got $5,000 a year that I have expendable for long-term care. Fantastic. That's what we're going to use, $5,000 total to fund our Asset Care 4. So the $5,000 comes in, and $1,600 of that will go into the base, creating a nice death benefit of $140,000. Again, same options. You'll access this for long-term care over 33 or 50 months. So if we chose 33 months, that would create an LTC monthly maximum of $5,600 per month per person. The remainder of the $5,000, the other $3,400 is coming in to buy the lifetime rider. So the $1,600 and the $3,400, that makes up your $5,000 a year to pay for this. This is basically our answer to traditional long-term care, with the big exceptions being with traditional LTC, your premiums aren't guaranteed. Not only can they go up, they most likely will go up. Secondly, you're not going to get a lifetime benefit with traditional, and you will not get a death benefit. Traditional LTC is much like auto insurance or homeowners insurance. You use it or you lose it. With us, your money comes in. It can never increase. If you don't need it for anything, you have a death benefit available to you. If you want your money back, the money coming into the base has a very healthy amount of returnability. And of course, again, you're getting a lifetime benefit with guaranteed premiums that can never, ever go up. Same thing as Asset Care One. All the rider options are the same. The difference is we're funding the base with annual premiums, which can be broken down into monthly premium payments, quarterly premium payments, or semi-annual. And again, you have the option for 10 pay through 20 pay as well. That's Asset Care 4. Now I want to talk about using qualified money. Like I said, we historically have used Asset Care 3, which is a defined product that will use qualified money, but we now have a much better way to do it. It does everything Asset Care 3 was doing, except you have a lot more flexibility and a lot more options on how to do it. And the way we do this is quite simply, when you're working with clients that have their money in an IRA or in a 401k or a 403b, what we do is we set up an IRA at One America, and we're going to roll some of the money in their existing IRA out of theirs and put a portion of that into our IRA. And in that IRA, we're going to use one of our SPIAs that we call immediate care. And let's show you how this works. And what I want you to imagine is at the top half of this hourglass is that IRA that we created at One America. And in that IRA is our immediate care SPIA. And what we're going to do is, and we're going to use the same $125,000, except of course this time it came from the client's IRA or 401k. We rolled it into our IRA and we put it into our SPIA. And we're going to choose one of two options. We can choose a 10 pay certain out of the IRA or a 20 pay certain out of that IRA, out of that SPIA. And in this example, we went with a 20 pay certain. And obviously what we're going to do is take that payment every year for 20 years and use that to fund our Asset Care 4 product on a 20 pay as well. It can be done on a 10 pay or on a 20 pay. So if you pick a 10 pay certain out of the IRA, you'd pick an Asset Care 4 on a 10 pay chassis. If you pick a 20 pay certain out of the IRA, you'd pick the Asset Care 4 on a 20 pay chassis. What's so great about this, and why this is, first of all, no one else is doing this, and why this is so different than what we were doing with Asset Care 3 is a few different things. First of all, Asset Care 3 was defined as only a 20 pay. With this, you have the options of being 10 pay or 20 pay. That's great. That's number one. Number two, what's great about this is the money coming out every year from the SPIA, this $8,000 in this example, every year that's going to come out for 20 years to pay for the Asset Care 4, you can use that money to pay the base and the rider. We weren't really doing that before. You couldn't do that before with Asset Care 3. Now it could pay for both. Yes, of course, this $8,000 coming out of the SPIA, out of the IRA is taxable, but you're grabbing money from a 401k or an IRA, it would have been taxable anyway, and we're going to space that taxation out over 20 years. The other thing that's so great about this is, let's say you have a husband and a wife and all the money's really in the husband's name. It's in his 401k. Well, you're going to take that money from his 401k, throw it into the IRA, into the SPIA, and take 20 payments out of that to fund this Asset Care 4. The flexibility here is if he's not insurable, we could still use his money because he doesn't have to be on the Asset Care 4 policy. We can put just his wife onto that, or better yet, put his wife and anyone she has an insurable interest with. It actually just occurred to me that I didn't talk about if you apply with someone that you have an insurable interest with, they have to be inside of 25 years between their two ages. But this is great because previously with Asset Care 3, if it was the husband's 401k that was rolled into our IRA, he had to be on the policy. Now he doesn't. She can be on it by herself or with anyone else. Also, if this is a 20 pay out into the Asset Care 420 pay, and one of them has to go on claim inside of 20 years before it's even funded, everything still comes out 100% tax-free. The LTC benefits come out of the death benefit tax-free. It doesn't matter that you haven't finished funding it. That's no problem. You're also going to get commissioned on both the SPIA and the Asset Care 4. So all around, this is just a win-win-win on using qualified money. And we've got this transmittal form when you set up the SPIA that the money will come out of the SPIA, out of the IRA to pay the Asset Care 4 every year. It all happens behind the scenes. You never have to do anything again. You'll just get a 1099 on it every year. So those are the Asset Care products. And again, don't worry about remembering which product does what. Just remember your opportunity. You now know you've got a fantastic solution. For your clients who are very affluent, they can do a single premium approach. Well, you've got a great solution for that, where a single premium can come in and fund the base and the rider, or all these different options to fund the rider. You now have a great approach for your clients that were maybe looking at traditional LTC, or they're more income heavy with an annual pay option, or executives that want to do a 10 pay. And now you have a great approach for clients that have a lot of money invested in their 401k or IRAs, and they're really not using that for income. And especially for clients that are already pulling out RMDs, what a great solution or use of those RMDs to put that into our IRA, our SPIA, to fund a 10 and 20 pay Asset Care. So I want to go into our annuity products. These are extremely important to understand. And whether you're selling annuities or not, it's absolutely irrelevant, because all you need to know is that your clients have them, and man, do they have them. The government did a Gallup poll and found that there's about $3 trillion out there right now in non-qualified annuities. And even better to know is that roughly 80% of them are not being turned on for income. Most people don't turn them on. They don't want to pay the taxes, because these annuities, these non-qualified annuities, are tax deferred. They're just sitting there gaining interest. And if you use it for anything, you pay tax on it. So people end up dying with them, and they're the worst products to die with, because they just leave a taxable event behind to the beneficiaries. So what a great opportunity, the government said, to further privatize the long-term care industry and create more long-term care products to allow for that. So as a part of the Pension Protection Act, which went live January 1, 2010, they allowed for the creation of Pension Protection Act annuities. You really want to pay attention to this. So how does this work? Here's an existing annuity that a guy invested $50,000 in. Over time, it grew another $100,000. Those are the taxable gains that are deferred taxes. So now it's worth $150,000. So if he uses this for anything, the gains come out first. That $100,000 comes out first. He's going to pay tax on it. So the government said, let's create a good opportunity here. And they allowed for the creation of Pension Protection Act annuities, which exactly 2 companies jumped on, of course, us being one of them. So what he can now do is use this annuity, which he's just been holding on for use as emergency money. This $150,000 annuity that has $100,000 in taxable gain, he could do a 1035 exchange of that money into a HIPAA qualified Pension Protection Act annuity, and now all of that annuity's value, including what was once $100,000 in taxable gain, is now 100% tax-free if they use it for long-term care. That in and of itself is enough sizzle where you should be beating down the doors of any person that you sold to or knows owns a non-qualified annuity, is not using it for income, and has no long-term care protection. There's no better funding option for a client like that. So that went live January 1, 2010. We went live January 1, 2010 with our first Pension Protection Act annuity product, and we called it Annuity Care 1. A couple years later, came out with Annuity Care 2, and they're a little similar because they share interest rates. So currently, and actually the interest rates just did change. I apologize, 2 days ago. I need to update the illustration, the presentation. Annuity Care 1 has 2 interest rates. Like most annuities, it has its cash value or accumulated value, which is currently sitting at about 1.85, but then it has a long-term care value interest rate. Much like where our asset care products aren't used for death benefit, our annuity products aren't used for income. So we have 2 interest rates, like a standard annuity, but the second interest rate isn't for income value, it's for long-term care accrual value. And that's currently sitting at, I believe, 2.5%. So 1.85 for cash value, 2.5% for long-term care value. Now, like our whole life products, the asset care, you can apply as an individual or as a couple, and we use joint equal age again on this. However, if you apply with someone, you have to be married. They must be your spouse with the annuity products. It doesn't work with insurable interest, but of course, it does take just one premium to cover 2 people. In all of our annuity products, we have 3 of them are all Pension Protection Act eligible. And you do not have to go like to like, meaning if you have a couple that's sitting on an annuity that's in both of their names and they want to use that and bring it over for just an annuity on the husband, you can do that. Or if there's a husband that has an annuity only in his name and he wants to bring that annuity over and do that on him and his wife, you could do that as well. So how does Annuity Care 1 work? Fairly simple. You bring a single premium into the base of the contract. It's going to go up at its accumulated value interest rate and then the long-term care value. We just talked about that. And then when you need it for long-term care, we'll look at the long-term care value account and what it's accrued to, and we divide that by 36 months. And that's how we determine what the LTC monthly benefit is. But much like all of our products, the base, of course, is just the beginning to get you into the ability to buy one of our very robust continuation of benefit riders. Well, Annuity Care 1 has rider options, of course, as well. And those are to get an additional 36 months of long-term care or a lifetime benefit of long-term care they'll never outlive. We actually have an annuity product that has a lifetime feature as well. The way you could get one of these options is either annual premium payments or you could just single pay it as well. And for the most part, most people that are buying our annuity products are going to be coming from existing annuities. So they're probably just going to want to single pay the whole thing coming from the value of the existing annuity they have now. And that's exactly what this woman does in this example. Here's an 81-year-old female currently sitting on an annuity worth $1.25. It's non-qualified. It's got a lot of gain in it. She doesn't need it for income. It's a ticking tax time bomb if she ever uses it for anything. And if she dies, she hands then a taxable event to her beneficiaries. But in her mind, if she ever needed long-term care, she's got this $1.25 to use. It's got a nice 3% interest rate, so she's never really churned it. It's just kind of sitting here. What a fantastic opportunity to use this mostly taxable annuity to fund an Annuity Care 1 product with us. And that's what she does. But she's 81 years old, fixed income, doesn't want to deal with making any annual premium payments to get this rider. She just wants to take the 125, dump it into it fully, be one and done. And that's exactly what she does. So of the 125, 102,500 will go into the base, and the remaining 22,500 will go into the rider. So let's just say, without any growth whatsoever, she needed this day one. Like, she came from an existing annuity only worth $1.25, but she'll probably go through in over a little over a year. If she needed it for long-term care, be paying tax on those gains. But if she needed this day one with us, well, you would take the 102.5, divide it by 36 months, which is about $3,000 a month or $36,000 a year. And that's what she'll get for long-term care benefits, 100% tax-free until she exhausts what's in the base. And then she'll be using her rider, which just means she's going to get that $36,000 a year forever. So we took an annuity worth only $125, has sizable tax consequences associated to it if she used it for anything, in particular long-term care. We turned that into $36,000 a year, tax-free, for long-term care for the rest of her life. It still heads you win, tails you tie, because if she wants her money back, well, whatever's in the base, she can get back, the 102.5, minus, of course, 9 years of declining surrender charges like any annuity. She dies, she never needs it. Well, she'll get the 1025 back. Of course, there's no surrender charges upon death, but there will be taxes on any gains upon death. There's no magic bullet on that. And of course, if she needs it for long-term care, that's the real win. We're giving her $36,000 a year, tax-free forever. We took $1.25 tax deferred, turned it into $36,000 tax-free for the rest of her life. That's Annuity Care One. Fantastic product, fantastic solution. If you want to say there's any kind of fly in this ointment at all, it's the fact that, well, her existing annuity was worth $125. She had to break off $22.5 to buy the rider. That money's gone. Any money that ever goes into the rider has no equity. Those payments are gone, much like traditional LTC. So she, day one, is losing $22,000 and change, to buy this, and this is her ledger will read 1025. Still, obviously, great deal. She's going to do it. But we said, how can we make something that's really good even better? How can we come up with a product with the riders included? They don't have to deal with annual premium payments. They don't have to break a chunk off to buy it. And that's how we came up with Annuity Care 2. By the way, Annuity Care 1 is available for people up to the ages of 85 years old. And we pay 4.75% commission on people up to 75. Older than that, it's 2.75. So here's Annuity Care 2.
We got about 2 minutes left. I just want to give you a heads up.
I appreciate that. I was looking at the time. I'm going to cover Annuity Care 2 and let these nice people go. So Annuity Care 2, and you definitely want to hear this because this is probably one of my favorite products. Single premium will come in at the same interest rates, but the difference with this is we're going to include one of 3 rider options. There's no annual premium and there's no single payment for it. You'll get to choose between 36, 72, and 108 months as the rider option. How do we do this? If there's no annual premium and there's no single premium, obviously there's got to be a charge for this. We're going to take monthly charges off the base interest to pay for one of these rider options. And what this really translates to is if you went with a 36-month option, that's going to give you 2.5 times the base. The 72-month is 4 times the base, and the 108 is 5.5 times. So let's just say you went with the 72 months, which is my favorite flavor. You can tell someone now that has an existing annuity that's got $200,000 in value, that's got a lot of taxable gain, and say, you know that annuity you're sitting on, tax deferred, you're going to pay taxes on if you use it for anything. I could take that $200,000 annuity and make it worth $800,000 right now, tax-free, 100% for long-term care. You want your money back? Take your money back, minus surrender charges, of course, declining over 9 years. And if you die and never need it, that $200,000 pays out to a beneficiary. By far one of my favorite products because we include the rider, and this is available for people up to the ages of 80 years old. Before I let you go, a little bit about the company. We've had these products for going on 30 years. Our company's 140 years old, $80 billion company. We're a mutual company with a 95 Comdex. We're A+ rated. Last year paid over $230 million in claims alone, and we're AA- with S&P. Our financial strength and fortitude is one of our best attributes. So again, don't worry about everything I just told you. I told you a lot, and I'm quite aware of how much I just dumped on you. Come away knowing your opportunity. Pick up the phone, call Joe, call Andrew, call Bill. Hey, I got a guy, fits into one of those perfect solutions that Keith was talking about, get an illustration, and then go further down the rabbit hole on how this works. Bill, I want to thank you for having me on the call today. If you want to get a review of this, I do this training every Tuesday at 2 p.m. Ask your Levinson associate on how to get on with that. Thanks again, Bill.
Great stuff. Thank you so much, Keith. Great job. Okay, so real quick, we have 4 minutes left, and we're going to end right at 3 p.m. Eastern. So good stuff. I want to just show you real quick our Sell While You Sleep sneak peek as promised. Okay, so real quick, like I mentioned earlier, every Levinson agent will have their own link. And you'll be able to customize your link with a picture of you, let's say, and a picture of your logo with your contact info. Okay, so it's a free website. Think Amazon, your own Amazon site for insurance products. Your client goes in, they click, they put in very basic info, gender, date of birth, state zip code, and the next screen comes up. Look on the left, the bottom left side. Okay, that's the full screen that comes up. Very simple. It says life, illness, disability, accident, senior, and packages. They click whichever part of the industry they want to see products, okay, related to, and it shows them what life insurance products are available, what critical illness, what disability, shows them rates next to each product. And then it says apply now, screen comes up, one pager, apply. Most of these products are instant approvals, okay, or within 24 hours and you are done. You, the agent, gets full commission plus renewals, and it's still your client at the end of the day. This is a industry disruptor. It's never been done before, and it's exclusively available through Levinson. First time ever. I'm going to show everyone the actual free version at the expo, and that's when we're going to launch it. So launching next month. I couldn't be any more excited. Over 10 products with 3 carriers, and it's only going to get bigger and better. So first time ever been done. Okay, Andrew's going to show you how to dive in to start finding some LTC prospects to use our free database. So Andrew, you there?
Yes, sir. Bill, thanks so much. Guys, appreciate the time. I want to go over our Agency Automator platform. If you're not already using this, you definitely need to call our marketing team, speak to myself, Joe, and the rest of our team here, and we'll get you set up. And, what Keith said is all really powerful, but at the end of the day, if you don't have anybody to talk about this product to, it's all for nothing. So what we're going to do is help you develop more prospects and leads for your business, bar none. And it's absolutely free if you're a Levinson agent and you're contracted with us. So on the screen in front of you here, you're going to see a sample that we put together inside of our consumer database engine. Okay, so this is inside of Agency Automator. We have over 28 million consumer records all over the country in our database. Okay, so what I did is I did people who are turning 65 within a 50-mile radius, had a certain net worth, about 100,000 or more, and that's my primary client for this One America product, right? So I did a search, and I got 15,000 results in what I was looking for. So now I could take that information, names, emails, phone numbers, and I could do a marketing campaign to them. And we have over 1,200 templates already built for you, ranging from life insurance to linked benefits, long-term care, anything you're selling, including this product. We have material already in there with videos and clicks to call and everything like that. So all you have to do is get signed up for this, start using it, start marketing, and get your word out that you offer this product. And your best client is the one you already have too. So definitely leverage the same marketing that you're doing to these new prospects and send that same marketing piece to your clients. You certainly have an opportunity there. So call our marketing team. We want to get you set up for this. Next on the list here, I want to quickly go over the social media marketing tools that we have available to you. As Bill mentioned earlier in the podcast, we're going to be giving out to all Levinson agents the white paper that Gary Vaynerchuk put together for us on how to boost your sales using Facebook advertising. This is huge. If you're not doing this in 2019, you are falling behind. You've got to get on social media and get your presence out there. He built a multi-billion-dollar empire by using social media. So he's proven the concept for us, and we want to take that into the life insurance space. So we have a lot of things available for you, not just this white paper, but we also have other opportunities to help you. We have packages available to help you put stuff on your own page if you want us to moderate for you. We have a great opportunity with our virtual assistant to put all this marketing together for you. We also have training videos. If you'd like to do it yourself and you don't want it automated, we have our own on-demand training center on CarrieLevinson.com where you can go and check out how to do it yourself. But definitely get involved and start doing that ASAP. Next up here, I want to quickly talk about our 2019 Agent Expo. This is coming up. It's 2 weeks away. It's around the corner. I can't believe it. I feel like we just did ours last year, but this is bigger and better than ever. And I wanted to put a little different spin on it this time around. So we came up with the top 10 reasons to attend the 2019 Levinson Expo. So you're going to see that in the screen in front of you here. So I won't go over every bullet in the sense of time, but I want you to read over this real quick. We have hundreds of agents coming across the country for networking. We have VPs, we have giveaways, and I want to quickly go over what you could expect as a giveaway. We have over $1,000 going to be given away in cash prizes. to all the agents that attend. We have raffles and ways that you can enter your name into that. We also are giving away a free package of leads, no questions asked. We're going to give away a bundle, a few $100 value of leads. Last up, we're also going to give away a tech package with a tablet and an Amazon Echo and Apple earbuds, the pods. So, I mean, you definitely want to be here, not just for the event and everything that we bring to the table and the technology service, but, you know, this is a life-changing event for you as an agent to, you know, really take your business to the next level and learn something that you can take with you and do some networking along the way. So definitely get on our website, register. Hundreds of agents are already coming. Book your spot. Next up here, I'm going to quickly just dive in. We have our agency automator trainings every day of the week. That's the tool that I just went over with you to prospect for new LTC clients. So I'm going to pass the rest of the information back to Bill to go over the scholarship platform and our Positive Tuesday quote.
Great stuff. Thanks, Andrew. I know we're a few minutes late and we're ending up in about 30 seconds here. I just want to point out a couple of things, as you see, and Andrew just touched on. Every Monday, Tuesday, Wednesday, Thursday, Friday, 2 p.m. Eastern Time, we dive into each tool that you want to focus in on. You can ask questions, and the whole purpose is to make sure you are comfortable. On the bottom there, that's most important, the lead generating college scholarship platform exclusively offered by Levinson. We have over 10 carriers now, over 100 qualifying products, okay, from term, LTC, UL, whole life, children's policies at $5 a month, okay, the ultimate door opener with a free 1-year scholarship. So don't miss that webinar, May 2nd, 2 p.m. Eastern Time. Okay, we're going to end with our Positive Tuesday quote, and I'm also going to give away the tablet to the 100th registrant, okay? So first of all, number 100 was Andrea M. That's Andrea M. like Mary. Congratulations. We'll mail out your tablet this week. We'll end with our Positive Tuesday quote. I love this. So, so important. The only time you should be looking back is to see how far you've come. And check out my hashtag, bottom left corner, no reverse lights. That's exactly what we do here at Levinson, constantly looking ahead and changing the game, okay? Which obviously we hope all our agents follow in our footsteps. With that said, have a great rest of the week, a good weekend. See you at the expo, and great selling. Take care.